welcome back to another great episode of the Business Talk Library on RETV. I am feeling great because I have my wife with me. I am wearing my Tampa Bay Buccaneers jersey, and no, I did not become a fan this year.
You better
I've been a
recognize.
fan since 2002, and yes, I did have to suffer through those horrible, rough years of watching football, but we are excited now because we got a Super Bowl, another
Yes.
one. We got two in our franchise, and I'm excited about that. But I'm more excited about this show. So, you didn't come here to
Nothing
hear
lasts
about,
forever.
football. Yeah, you didn't come here to hear about football. There's another show that you can watch for that. But on this show, we're going to talk about business. And one of the things that I thought was interesting is a conversation that I had with a lawyer out of New York. And one of the things she talked about was something that I think a lot of people are getting wrong, and they're going to get themselves in trouble. Now, I do a training called the Stay Out of Jail Plan. And these are things that people do that in running their business that can get them sent to jail or get them in trouble. And Nancy touches on one of those very, very well. So let's play the clip and then we'll come back and we'll enjoy the conversation.
There's so many publications and gurus out there that tell you to build your business with independent contractors. And this is an area I see a lot of people get into trouble. It's like, we like the way that sounds. It's like, oh, you won't have to pay taxes and benefits and all of that. But the criteria is very specific. So I think that's one of the key lessons I need people to that are watching this to get, is that you have to go through this step by step, and you have to analyze the type of work they're going to be doing, how often they're going to be doing it, how much control you have versus they have over how the work gets done. I like to tell people it's an independent contractor is an independent business owner with a contract, right? To do services that you don't provide. So, right, like if I were hiring somebody to do paralegal work, that's obviously part of my business is to do legal work. So if I'm having somebody come in on a regular basis that I'm paying under their social security number, and they're coming in every week and, virtually even coming in together every week, right? That they're probably an employee, not an independent contractor, because at that point, they're not independent business owners. They don't have an employer identification number. They don't have a tax identification number aside from their social security number. And so I see people get into trouble by not having workers' comp for them, disability benefits. And in New York, we have paid family leave. And especially right now, that's coming into play because people are using paid family leave to take care of loved ones that have the virus or that are quarantined, or their kids are out of school because of it, right? And we're using paid family leave to supplement that. And if you're not paying into it, guess who's coming and knocking on your door?
So there you have it. I mean, it was a lot of insight there that I think you can definitely go back. I mean, and the reason why I thought it was important because she actually helps work with clients. And one of the things that her and I talked about in an interview is that, she had a couple of people that came to her because they had gotten a bill from the IRS for like $60,000. And it was just fines and penalties. So that wasn't the back pay taxes that they owed. That was just fines and penalties because they were using or paying their employees as contractors because they thought that was going to help save them money. So it's a little bit of a technical, but I think it's a big topic. And I think it opens the door for, as you and I think about business, I want to talk about what are things that you've seen people do that could get them in trouble. But first, we'll start with the contractor versus employee one. What's your thoughts on that, Lola?
I think that's important. Funny thing is she was like going through that. I was trying to think about like some of the people that we recently hired. And I'm like, let me just make sure we're compliant where that is concerned. But no, I think it's important because I do think to help you avoid liabilities and no one wants to get in trouble with IRS. That's like one of the places like no one wants to deal with, right? Or go get into back and forth with. So I would just say, I think it's important to understand the differences, right? And like Nancy said, she pretty much gave you a very clear example. When you're working or you're hiring an independent contractor, that is someone who has their own business and you're hiring them to provide specific services. So you're not, they don't work for you, they don't report to you, you don't care about what time they show up. You have an agreement, a signed contract with them for them to perform XYZ services, and they perform that for compensation. And then once that work is done, they move on. They're not your employees. Whereas if you have someone that's providing a regular service, and they report to you, they're telling you what time they're coming in, it's long term, then you probably want to be thinking about whether you need to hire that person on as an employee. And so I think sometimes, as business owners, sometimes we try to kind of get away, or maybe like, I don't really think it's that important. I would say regardless of how much revenue your business makes and regardless of where you are as a business owner, if you're like, man, I'm only making $50,000 a year doing this business, like who's gonna know? Who's gonna know that I'm doing, I'm not bringing in I'm not doing the right accounting treatment. And what I would say, or the right tax treatment, and what I would say is, look, it's better to be prepared and do the right thing when your business is at a point where it's not yet grown than to have to, after you're growing your business and scaling your business, to then have to go basically find yourself in a position where you owe the IRS money because you didn't do things the right way when you first started out your business.
Now, I think that one's a very interesting point you bring up, because people ask that question to me often, like, because I tell them the same thing, is I've heard people say, oh, you should just hire, pay them as 1099 contractors, whatever. That way you don't have to pay the employer portion of payroll tax. And I'm like, yeah, you might want to make sure you get that right. Like, don't just listen to somebody you heard on YouTube talk about that.
Yeah.
Because if you get it wrong, the IRS isn't going to come to them. The IRS is going to come to you. And I tell people that, like, there are rules around that you need to be aware of. And so one of the things that I think that Nancy talked about that was very good is, like, if you're going the route of using contractors, the real thing is the relationship based on a contract? Like, do you have a contract? Like, are they a separate company? Do you have a written contract of, hey, this is what I expect you to do, this is when you're going to deliver it, this is what you're going to do, and that's the extent of the relationship? Because if there is no contract, then there's probably a chance that that relationship is not properly set. Now, the other thing that I think is very interesting is people ask at times, like, well, how will the IRS know if I don't do this? Now, one of the things she pointed out was, like, when it comes down to, like, workers' comp, when it comes down to paid family leave, or when it comes down to unemployment, because there was a friend of mine, another friend of mine in New York that has his own accounting firm, and he was telling me about, there was this company that he knew of that got into trouble with this because it was a doctor's office. He was paying all of his employees as contractors and not as employees. And he was like, his doctor's practice was making, like, 10 million plus a year. So we're talking a lot of money in this business. And one of the things that was happening was, he was paying them as contractors, and, the IRS, didn't know, wasn't finding out, but he had to fire somebody. And when that person got fired, they went to apply for unemployment. And when they went to apply for unemployment, there was no money being put into unemployment insurance because they were paid as contractors. And so that's how the IRS found out. Then the IRS got involved, and now this dude had to pay, like, these huge fines. I mean, it was above, $250,000 in fines and penalties. And I mean, just because I'm like, don't try to take a shortcut and cheat the system. Like, it was clear that what he was doing wasn't right. So make sure you get that right.
I wonder who his accountant was. That is so shady. That is so shady. That is so shady.
To avoid being sued myself for defamation of character, I cannot disclose. I know the name of the firm, but I cannot disclose it on the show.
All
I don't
right.
want to
No,
be
I'm.
sued.
It's a rhetorical question. Please don't answer that. No, I'm just wondering because oh, that sounds really painful. That sounds really painful. But yeah, and I think that question of like, man, like who's gonna find out? I feel like that's just the way it is in life. When you do something, you're like, I know one's gonna find out. That is precisely the time you get caught. Like I just don't. I have no desire to have to deal with that. So I think for me, I would advise, regardless of the size of your business, like just do it. Just pay the bill. Pay the bill when it's $250. Pay the bill when it's $300. Like just pay it. Just pay it and move on. Like don't put yourself in that position.
And because this area becomes interesting because not only do you end up having to pay it, but the IRS also charges you a penalty fee for
Yeah.
every day you were non-compliant.
Mm.
So if you do this wrong for a period of time, they could go back for a while, and you got to pay a penalty for every day that you were non-compliant, and the penalties can definitely wrap up. So that's on
Yeah.
employees versus contractors. Now, what's another area that you've heard or that you've seen people doing business that they think they're doing something smart, but they could get themselves in trouble with?
Mm, mm. That's a good question. I'm gonna throw it to you because I'm a little bit blank right now. So you give us an example.
I'm gonna say on sales tax.
Oh yeah. Oh, absolutely. Let's talk about that one. So what exactly on sales tax?
So now, just to give a context, I mean, sales tax, if you're selling a product, and in some cases, if you have a service, depending on where you live, the state or the county, whoever requires that you collect a certain amount of sales tax. Now, that money does not belong to you. It belongs to them. It belongs to the government. Now, your customers are paying it, but the government expects you to collect it on their behalf and then to hand it over to them at the end of the month. Now, where I see the issue is a lot of people, let's say if your price is, $10 and your sales tax rate is, let's say, 7%. So, the customer is going to pay you more than $10. But the thing is, anything above that $10 for that sales tax belongs to the government. What I've seen a lot of people do is, since all the money gets put in their bank account, they go spend the money or they go use all the money. And I'm just like, all right, guys, there's a problem here. So where have you seen that play out?
Dang, like I was so in tune to what you were saying. I wasn't thinking about ideas where I've seen it play out. But no, I would just say I think on a personal level, I think I'm not going to talk specifically. I know this is the business talk library, but the one that comes to my mind is a personal example. And I will say personal as it relates to taxes and just trying to game the system. I would say when people claim children that are not their own. And when people claim children that are not only not their own, but they actually are not dependents. Okay. Look, if you are not responsible for taking care of a child or taking care of someone and they are not your dependent, please do not claim them as yours. Okay. I Look, I know you're probably thinking like it's not a big deal, like what does it matter? But trust me, you do not want to find yourself in a position where you have to do that. So I'm probably saying that's mine, like where I hear people like even like growing, like even when I came to the US, like maybe I'd probably say when I was in high school, college, like when tax season would come around, people be like, oh, I'm looking for people to claim. I'm looking for people to claim. I'm like, what are you looking for to claim? Like your children are not enough for your own house. Like, oh, let me claim this person, add this person to my tax return. And I'm like, is this somebody that you're taking care of? Like, or are you just trying to add this person just because you're trying to get more money back? I'm so confused. And so I would say that's probably the one for me. I know that's a touchy subject, so I don't know. I'm not, maybe we don't dive into that one, but that's my view because I just think it's ratchet. It's ratchet.
That is absolute foolishness. I mean, because
It's
I've seen
ratchet.
that happen. I have seen that happen before, where I've heard, of situation, and I'm gonna no names, but I've heard situations where there are friends who or people that I know that prepare taxes, and they were telling me they were like, "Yeah, this person came to me and said they had 9 dependents," and I'm like, "You do?" I was like, "I've seen that person on Facebook. I've seen them on Instagram. I have never seen them with kids." So I'm like,
Yeah.
how in the world do they have 9 dependents and we have never seen them with kids or whatever?
Yeah.
And
Yeah.
and I told him, I was like, if I were you, I would not do that person's taxes because you don't want your name involved in that. I was like, for
Exactly.
sure, I know I'm not gonna do it because I'm not losing my license because somebody wanted to save a couple $100 or a
Right.
couple $1,000. I mean, yeah, that's just foolishness. When
And I wouldn't even call it, to be honest, in my opinion, I wouldn't call it saving. You stealing. Because I mean, in reality, like if you think about how taxes work, and I think people don't really think through this, you pay a percentage of taxes based on your income and how much money you make, right? And at the end of the year, the government will assess it. They'll be like, okay, what deductions do you have? What credits are they giving you? Let's say you have kids. Hey, you get a child credit, you get, hey, a dependent credit, you get all this stuff. And that helps basically reduce your taxable income. So how much money you're getting taxed. And they'll take your taxable income, multiply that by your bracket where you are. And then that's the difference. So if you overpaid last year, you're getting some money back. If you underpaid, you're going to end up owing. And that's as simple as it is. So if you're going in and you're basically adding in all these dependents that are not yours, that you're trying to say that, hey, like, I took care of this person. This person lives all the way in Colorado. Like, you never sent them any money. So what do you mean you took care of them? Like, this person is a grown adult. Like, they're 18. Like, you are not responsible for taking care of this person. And I think just that mindset of like, okay, I know it might not seem like a big deal now, but the worst thing you want is to get audited, because like we know family members that have been audited, and they've been audited. And if you don't have your stuff in check, like, that's a whole different conversation. So people are like, I don't make that much money, like I'll be fine. But if you have, like, you're making $30,000 a year and you have 10 dependents, like, come on now, that's probably going to raise a flag. So that's just my thing. Like, I'm just like, I think we need to. It's not like we're like, I'm getting more money back. No, you stealing money because your taxable income is reduced, and now you're not paying as much taxes as you should be paying based on how much money you make. So that's it.
So I think
Yes.
that that's very important because something you said about, people get very concerned, or I guess they're not as concerned about
Yeah.
how is somebody going to find out? How's the IRS going to find out? And one of the things that I don't think people realize is how connected the data is,
Yeah.
because through a simple computer program, it can be discovered. So let's say, for example, you're claiming somebody that is not your child on your tax return. You
Hmm.
need their social security number. Once you file your tax return, the system can just compare, has this social security number ever shown up on your tax return ever? And then
Hmm.
it can also cross check it to say, okay, all right, has this person's social security number ever showed up on anybody else's tax return? And if you have never been married to those, like, let's say, this person's social security number has been used last year on somebody else's tax return and the year before that on somebody else's tax return, like, there's going to be a trend. And what it could trigger is that everybody who has ever used that person's social security number or that child's social security number on their tax return, everyone in that line is going to get audited.
You get audited. You get audited. Everybody gets audited. Everybody. Okay. And it could have just been that one year. But I think, what is it? Is it 3 years? How far back can the IRS go? Like, that's
Um,
not
they can go
the
back a
three or
couple. I
five.
think they can go back. I want to say it's a 5 or 7.
I think 5 sounds about right. So maybe between 5 and 7 years. So any taxes that you've done up until 5 years ago, they have the ability under, I'm trying to remember what statute or what law that is, to go back and basically review all of your taxes for the last 5 years at any time until, I guess, within that period. And so I think that's just something to be mindful of. The other thing I wanted to talk about before we end is taking expenses that are not related to whatever the heck it is you're doing, especially if you have a business. Don't be putting expenses for personal expenses on your business and your business category, okay? Don't do that, okay? If you are getting gas, like if you're getting gas to go on a trip that has nothing to freaking do with your business, you shouldn't be putting that as business expense. I'm just saying, like, guys, trust me, you do not want to be audited. And that's the only thing that I would say. Like, I don't want to go too far into it, but I think that's another one I thought about when you were talking, is just like claiming expenses as business expenses that are really personal expenses.
I completely agree because I think, what one of the things that people hear when you watch the news, or someone on social media says, oh, you should start a business because you get
Oh
to
yeah.
deduct these, this and this. And I see some people like, yeah, I need to start a business to reduce my taxes. And I always tell people, like, one is, if you're going to start a business, go back and watch episode number 9 that we did where we featured Tarek. Go back and watch episode 9. You'll kind of understand why I'm about to say what I'm about to say. Is one is, starting a business is a very hard work, and it is a ridiculous idea to start a business. Now, I say that I am a business owner. I love being a business owner, but there is some ridiculousness about starting a business.
Yeah.
There's a whole lot of stuff you have to do that I didn't have to do when I just had a job. Now, I'm still an
Hmm.
advocate of being a business owner, but when it comes down to starting a business, one is, I always tell people, you don't start it to save on taxes. If taxes are your motivation, I'm going to tell you, there ain't enough tax breaks out there to justify just dealing with what you got to deal with to run a business. It just ain't.
Yep. I
It just,
agree. I fully agree with that statement. You could just keep your little 10. What's the tax document? Help me here.
1040.
Yeah, you could keep your little 1040, file that, get your little check back, maybe $300-$500. Just, hey, it's not worth the effort. If you're solely doing it and you're solely starting a business just to get up there and get more money back, it's not worth it, because the expenses you're gonna put in to do it, hey, I don't know. Just something to think about.
I mean, and then there also are limitations. Like, the IRS puts limits on
Oh yeah,
how many years you can show a consecutive loss. And if
exactly.
you show a loss for too many years,
Hmm.
then it definitely shows up on the radar that IRS, that's going to raise eyebrows at the IRS. And the big thing that I want people to understand is that when you get on the IRS's radar for an audit or for any type of issue, you stay on that list even after you go through the audit. And the last example I give is, even for like my parents. Now, my parents don't have a business, but yet they got audited for like 4 years in a row.
Oh
And the
wow.
reason, the reason why they got audited, when like after year number 2, they called and said, okay, why do we keep getting audited? And the reason they were getting audited is because they said, well, when we ran our computer programs, the charitable giving that you guys gave to your church, it exceeded the normal limitations. Like, we usually don't see people that generous. So they had to investigate it. Now, when they investigated, they found out, well, yeah, they did legitimately give that much money away. But it's like, even for doing something good, they still got audited. Where I tell people, like, being audited, it happens way more frequently than
Then you
you think.
think.
And
Yeah.
especially with, as we're leaving I mean, with everything that happened in 2020, where people weren't working and unemployment was rising as a result of the pandemic, the IRS wasn't collecting as much in taxes. So I tell people, like, hey, the IRS may be looking to close some gaps in their numbers, so you may see audits go up. So you might want to make sure you get your stuff like, have your stuff together, because if you got some funny business going on, the IRS may not be too friendly when it comes down to that. So this has been another great episode of the Business Talk Library on RETV. Don't want to scare anybody who wants to be a business owner. All we're saying is, just be legit about what you're doing. Like, and if you don't know what you're doing in the area when it comes down to your money and to your taxes, is talk to a professional who does. And really, like, make sure you actually can trust the professional. Like, if they're a legit person, more than likely you can probably roll with what they're saying. If you wouldn't trust that person with your kids, probably don't talk to that person.